Okay, and we are live. Uh, Welcome everyone for another episode of the Crypto Hour. It's Friday, the 2nd of August, and it's 8 a.m. every single morning. Now, I just want to ask you first, how did you enjoy last week's sessions with Jonathan? To look at the real functioning of a blockchain. We looked at mainly DeFi last week, but there are so many more things that we can look at. So, would you like to see more at another stage, maybe look at identity or other things, other aspects of cryptocurrency on chain? So if it's something that everybody likes and wants to see on a regular basis, maybe Jonathan, we can try and do it like a a regular event, maybe once a month or something like this, where we look at, maybe we can post different different aspects of blockchain that we look into every single month. Um, so what's your feeling about it, guys? Give me some feedback. And Jonathan, what's your feeling about it as well?
Yeah, be happy to. There's always more to go into with blockchain, isn't there?
Yeah, because we're moving now in we look at in a second where we are in the development cycle of this technology. And as we move towards the more mature stages of the life cycle of this technology, I mean, people will start using it more directly rather than through intermediaries. Uh, because the intermediary stage is something that is used at an early stage of a technology. When we are in the kind of like the innovation and the early adoption stage, this is where um, helpers so much put themselves in between the product and the user, to help the users get to use the new product. So there's going to be a lot of that in the next few months and years, probably, until we get to the same stage that the internet has gone through already, from 2000 to where we are today. Um, Crypto technology is going through a very similar cycle, even faster than the internet adoption. So we're going through the same stages as we have already done. And if you remember the early days of internet adoption, everybody was using somebody to help them do stuff on the internet. Where now, pretty much, there are so many tools that allow you to do things on your own, maybe not as well as professional users like Jonathan, but it is possible to do things on your own that would have been a lot more difficult at the beginning of the cycle. Same things for crypto. So let me go and share my screen so I can show you. Sorry, you don't want to see this. So let me go. Where are we going? Where are we going? Okay, so if we are looking at the adoption curve for Bitcoin, at the moment we are just around 5% mark. Okay, so we are at a very similar level at the internet where the internet was at the beginning of the century, okay, in 2000. And if you were to transpose the two, we'd see as the adoption curve of Bitcoin is actually steeper than the internet adoption curve. Um, Now, if we look at the life cycle of a technology product, we have gone through the innovation stage, and we are now at the kind of early adoption stage. Now, the early majority will kick in at around 16% adoption. So just remember that we now at the moment about 5%. So there is once we get into this early majority phase, this is where the intermediation is going to be is more powerful in a way. And we see the start of this already today with the big boys now starting to bustle into the crypto market, with the ETF launch and funds being launched by big investment houses like BlackRock, Fidelity, Grayscale, and so on. Now, there is kind of this gap as well. It's called the chasm, between the two phases, before we get to the early majority phase. And this is where, in a way, the big business is making its mind up as well, if they can use this technology now to best position themselves to offer it to their customers. And this has started actually early compared to this chart. Is something that's already going on at the moment, and has been going on for the last couple of years, because first of all, the idea is, can we stop this? And then the realization actually is not too late. Okay, how can we join it? How can we make money from it? And now they seem to have started to crack this with all the products they're coming to market. Now, obviously, this is not, as we always say, crypto is not an island, okay? And it's part of, we invest in different things according to how sure we are that something is going to happen. At the same time, also depending on what is going on the economy in general, and how much money we have that we can spend and invest. Now, I wanted to have a look and just go back a little bit to a couple of charts. This is the private sector debt service ratio for some of the major industrialized economies. And I just wanted to have a look at where were we in beginning of the pandemic. So this is this line here, if you can see it. Okay, so end of March of 2020. And then we have a look as well how things have changed from then to now. So different countries spent, so you can see the countries that are more leveraged, they spend more money to pay for their debt, and the ones that they are kind of more conservative. I mean, straight away you can see that Germany is more like on the conservative phase, and some of the ones that are more leveraged, like Canada, Norway, and Sweden. On the countries they're more you want to say they take more risks. Now, what you want to see is that since then, where are we now, and how things have developed? I know that many of you are in Australia, for example. We started with about 20% of your private income being spent to pay for your mortgages and loan and so on. And then during the pandemic, actually, you had a good time, because that from 20% it went all the way down to about 17. So people are kind of more money in the, at least perception of they were spending less money to pay for their debts, and this then from the end of 2022 things have started to then reverse and get back to, first of all, to the long-term averages, and now even to outstrip it. So we can see from 17% now, where we are today is 22%, which was worse than we were at beginning of the pandemic. So we can have a look. Australia is definitely, you probably feel it in your pocket, because the situation now is worse than it was at the beginning of the pandemic. Canada, pretty much the same. Switzerland, a little worse as well. China, a little worse. Germany are actually so conservative and now better now than they were at the beginning of the pandemic. France the same, UK the same, Korea worse, Norway much worse, Sweden the same. Although it's a very elevated levels. And the US, because the US is the larger economy that we look at the moment, as you can see, similar thing to Australia, where was about 15% of national income was spent on debt. Then it went down to below 14%, and then it started ticking over from the end of 2021. Okay, so 13.8, 14.1. Can you see the trend now? 14.1, 14.4, 14.6, 15, 15.2, 3, 4, 5. So obviously, it doesn't seem a lot in percentage points, but obviously each increase means that people have got less money in their pocket to spend. But more important than this as well is just to see, because each economy is based on certain norms. So it's more interesting to see where these numbers, which are different from different economies, how much are they different from their long-term averages? And it's this chart here. So if we look here, so this is where we were again at the beginning of the pandemic. Okay. And so we'll see already at the beginning of the pandemic, the countries that were already a bit stretched and the ones that were having a good time. Australia was having a good time at the time. Canada was suffering a bit already. China the same. In a smaller amount, Switzerland and France, and then we go back to Sweden. We already talked about in the past. And again, the US was pretty much in having a good time, so to speak. And then we go back and you can see in the colors as well. Kind of like green is better than the average. Red is worse than the average. So we can see how things have progressed for many different countries, and you can see that for most countries, is actually the situation is either the same or worse now than it was at the beginning of the pandemic, because they have used a lot of their reserves to support and keep the economy going. So apart from, funny enough, the Germany and the UK, which are kind of like the two exceptions in this chart, most of the countries now are in a worse position now that they were at the beginning of the pandemic. And again, and this time in between was filled with a lot of money printing as well, which again made people feel that they had more money to spend, and because the money itself was devalued, and so this worked through the economy with what we see in the boom that we're seeing in a lot of investment products, including crypto as well in that. But the more obvious one is the stock market in the US that has been hitting new highs in the past couple of years, as if this can carry on forever. But these numbers will tell you as well, and you can see especially not just the numbers but the progression of these numbers will tell you that at some stage some of the economies will need to tighten up their belts. And the effect of tightening up their belts is again felt in the economy, because means that the more money. So this is like money that you spend to pay for your loans. Okay. And as this goes up, you have less money to spend in buying the things that you want. Okay. So the effect of that is then being played out on the economies. So there is still a little way to go for the US, because we spoke in the past. We spoke in the past that the US is used to fixing their loans very far in advance, 20, 30 years. And so the effect of the raise in interest rates, which are now at the highest in the Western world, and things haven't changed this week, and the interest rates have been kept the same. Even with this raising interest rate pretty much from 0 to 5.5%, it takes time to work its way into the economy. And this is why we're seeing these slow going back to the long-term averages. And we'll see in the next few months if these long-term average will actually, the difference will actually turn positive, meaning that now they're spending more money to service their debts than they had in the past 20 years. So okay, let me just go out from there. And let's have a look at what this week was, a kind of from the economic calendar, was kind of like a fairly heavy week, in terms of announcements. I just select the main ones. First of all, Japan. Japan has now raised the interest rates from 0.1% to 0.25%. So not a big increase, but Japan has been for many, many years in negative rates. And the thing is that they are raising these interest rates. The market doesn't actually believe that they can sustain it because the interest rates, the yields on their bonds hasn't changed at all. So the long-term bonds are still around 1%, and that hasn't really changed with this increase. But they are trying to stabilize the economy, and that really hasn't happened yet. So Japan has got a long-term fundamental issue that they are trying to square, but it's very difficult to square at the moment. The second announcement was in the US. So the interest rates, as I said, was kept the same at 5.5%. But again, the market now has kind of repriced what they expect from this, and we'll have a look at that in a second as well. And then yesterday we had the announcement from the Bank of England. Again, they've reduced the interest rate from 5.25 to 5%. Okay, we also have unemployment claims that show again a very, very slow deterioration of the job market in the US. So this, together with the announcements and the press conference, has made it more likely that we are going to see a decrease in interest rates in September. Today, again, it's the news haven't finished. We already should have had the inflation numbers from Switzerland that came according to expectation. So again, the inflation, similar to most places in the world, is actually stable or actually coming down slightly. And the other big announcement is the non-farm payrolls today at 8:30 a.m. in New York, which again, it's an announcement that can move the markets quite wildly, because again, it's one of the two things that the central bank looks at to set interest rates as well. So they have the two remits, is to keep inflation under control and to keep the job market pretty much in full employment. So but what the attention of everybody has been on lately has been on last weekend on the Bitcoin conference. And if you follow it in the news, Trump and the Conservative Party, the Republican Party, were present at the convention, and Trump made a usual a lot of statements around Bitcoin, saying that if they win the election, then they would have a commissioner that replaced Gary Gensler. They will be a lot friendlier to crypto. They also said that the US will not sell the Bitcoin that they acquired, but they will use it to form a reserve, of Bitcoin in their national coffers. Again, what Trump says can be taken with a pinch of salt, as you know, but it's not that that's important. It's the fact that an ex-president and a very prominent presidential candidate, is talking openly about Bitcoin because he knows that now the argument is important and people want to know about it. So that's the main thing that is like the game changer, by the way, in cryptocurrency terms that comes out of this weekend. It's like just forget about price for a moment, but just look at the outlook for Bitcoin first, because they were talking about Bitcoin, but cryptocurrencies, obviously, that follow the lead of Bitcoin. And just imagine who is the target audience for Bitcoin. And I must say that there is obviously Trump appeals to a market that will probably not be as comfortable with Bitcoin as the more progressive parts of society. So the fact that he can actually talk and present this to people that haven't quite been exposed to it as much as everybody else is very relevant, because it means it can bring whether you like him or not, Trump has a following of many million people that can bring to this market. And this is the effect of this is not something that will be felt now in the short term, but in the long term can help to bring the market to a point where we are in that we say in the product life cycle, where we're now hitting the early majority phase. So from where we are now, obviously, it's something that will still take a while to get from 5% to 15%. But think about how far we've gone already to get to the 5% point, and where we will be, and what the results will be then from here on. Now, I think I forgot to take a screenshot, but let me just have a look. If my old screenshot, if I go one ready, but no, I don't. Okay. The expectations for rate cuts and for the expectation in what's going to happen in 12 months time is changed a lot since March to today. So whether in March there was a big probability, a high probability that the market would carry on being higher for longer. Now there are expectations that over the next 12 months are going to be four rate cuts, and as a result of that, there has been kind of a repricing as well of the bond market, and there is an expectation now. The probability of the market hitting recession is gone back from about 4% to about 20%, which is quite significant statistically. So what happened in the bond market, and I can show you. So this is for the long-term yield, which then are the ones that are used as well to say mortgage rate and so on. You can see I've been talking about the bonds as being an investable market, like a good time to buy bonds right now. This is what happened in the last 1, 2, 3, 4, 5, 6, 7 days. 7 days, 7 market open days. So it's like one week and a bit. So it's a 7% difference in yields from beginning of last week to today. So and this is quite significant. And we can see so yield are inverse to pricing in yields in bonds. So if the yield goes down, it means that the price of bonds goes up. So the yield has gone from 4.6% to 4.3%. Okay, but just remember that if you buy like something like either a bond or something like TLT, which is the an ETF that invests in long-term bonds, a 20-year plus, you can see the difference in price. It went from 91 to 95 within a week. So this is what the opportunity sometimes in investing in something that's like traditional Okay, so we're going as far as almost like 5% in a week. And this is also a product that pays you, pays you a dividend monthly. Can you see all these D's here at the bottom? That means that those are dividends. Okay, if you click on it, it tells you that this is like this costs $95 now to buy one of that. It pays a dividend of 31 cents this month, 29 the month before, 30. Can you see at 31 cents? So so the idea, and this is, I started talking to you about it, this from beginning of the year, okay? And so this would have been the ideal, so this green band would be kind of like the ideal place where to buy some bonds. And you can see as well, but we go now, even if you bought at the, say, within this band at the worst possible price, you'll be now today, you'll be sitting about 6.5% gain with very little risk and with getting paid to do that on a monthly basis. So the trajectory for bonds is fairly clear, and the reason why I keep talking about it is because in investment you have to balance the returns with the risk that you take, and there are cyclically very few occasions where it's the right time to do something, simply because if you think about every market as pretty much an elastic band, it will sometimes be stretched in one direction, sometimes being stretched in the other direction. As appear in 2020, it was stretched, it was like too high, and then it took 2 years pretty much to get back to let's say this orange line represents a very crude representation of long-term averages, and then now we stretch in the other direction. So when you see here what happened in October, this is the biggest market in the world by far, okay? In terms of the amount of capital that goes through the bond market is much bigger than the share market. Now, when you think about this, so what happened in October, for something that has been dropping like a stone for 3 years, okay, what happened to make it turn around and start going up? Okay, this is not me and you with a little, $50,000, $100,000 here and there. This is like, trillions of money changing direction. Okay, and at the end of the day, when you go and look back, so the reason why there is that, the reason why the people are buying is because there is, these are decisions that are made a long time ago, thinking, well, if the market goes back, if it goes back to the point with buyers, because they know that this is not like a stock that can go just in one direction. It will go up and it will come down. Okay, so once we got evidence that the big investors have actually come in, so just excuse me a moment, I need to close the door to the garden, otherwise my rabbit will disappear. Okay, so once we got evidence that that the tide is turning, means that if you look at this, I'm not looking up here, okay, because you in a way, if you look at all the way from let's go to a weekly chart maybe. Can you see at the moment we just bounce pretty much from the lowest, almost like the lowest price we've ever been since 2002. Okay, now obviously you want to almost like discard this, because this is something that only happened for a period of 1.5 to 2 years, but we don't know if the market will ever get back to these points. But even if it gets back to, let's say, averages that we've been in pretty much since 2010, 11, that would mean a considerable a considerable increase in capital value. So we're talking about 30% here from where we are now, while at the same time being paid to hold this position. Okay, because at the moment, as I said, even after the market has gone down, we are still talking about a yield of over 4%, 4.3%, having something that, and this is what I'm talking about, cyclical investment opportunities. Maybe they're not sexy. Obviously, bond investments are not sexy, but they're mainly used by investment houses to produce predictable cash flow. Okay, and they know that if they buy bonds, they will have 4% at the moment. In October, this percentage would have been much higher. Would have been let's have a look. In October, so this is the opposite. You see, the is the reverse of the chart that we were looking at. So in October, we were over 5.3%. Okay, so these people that are bought at that price, they've locked in a long-term return of over 5%, while at the same time now, so if they bought here, they're now looking at 15% gain, okay, while getting paid 5% a year to hold it, 5.3%. So that's when we're talking about the power of holding or getting into certain investment at the right time, as opposed to buying at any other time, because this wouldn't be as attractive, if the price goes back to 115, 120, because then you will be like, pretty much on a long-term average. What's the other things that we have seen, which is interesting to notice? Okay, Bitcoin again is still in this holding pattern, sideways pattern. But the one thing that's interesting at the moment, we are 64,500. Okay, now we've had two of the largest possible supply side appearance of Bitcoin on the market. It has been pretty much absorbed by the market. The two things that we said, Germany selling a lot of the Bitcoins, several billions of Bitcoins that were confiscated in January. And now, again, there are several billions of Bitcoins that are being distributed from Mt. Gox, being there for many years. And that is even more significant because obviously the money from Mt. Gox has been locked in for about 10 years. And so if you can imagine, money that was used to buy Bitcoin 10 years ago was very little. Now Bitcoin is worth very much. So there will be a lot of people that want to cash in, and that's only normal, because these are life-changing amount of money for many people. The fact that we've had lots of billions of Bitcoin appearing on the market with pretty much no effect on whatsoever on the price. The price is still, it's still happily in the middle of this sideways range, waiting for the next push up. It's very significant because again, it shows you, and especially if you look at the whales accumulation pattern, so you can see that they're still buying. So apart from reading about what MicroStrategy is doing every week, they keep raising money to buy Bitcoin. But in general, things that we see on chain show that the accumulation is growing all the time, and we are getting to a point where we hit pretty much peak selling, and that again will start to reverse very soon. So the prospects for Bitcoin and for the crypto market in general, for me, at least from my analysis, they're very bright. If I had to tell you when this will happen, obviously nobody has a crystal ball, but in looking at the past, again, we are looking at, whereas where are things started to change, and will be like towards the end of this month and September, when things are started in the past, are started climbing. The actual big moves, last time of asking was in October. Okay, so you can see Friday the 13th. So that's interesting. So this is where the big move actually started, and where we'll see an increase of about 30% of the price of Bitcoin within a month, and then followed that by the Christmas rally, and then from January was like the beginning of the real big move here, for the next 3 months. So if the same things were to happen at the same with the same time scale, then we're looking at, we are getting close to the point where things are starting to turn. So I will say in the next 60 days we should see some significant moves in that. At the moment, we just wait and see. It's just good, as in with all the selling that there has been, that Bitcoin is still hovering around the previous all-time high. Okay, and now if we go and have a look at the funds, ETFs, there's been a new entry here, and you see here number 7 BTC, Grayscale Bitcoin Mini Trust. Now Grayscale, which as you can see here has been hemorrhaging Bitcoin ever since its launch, has now launched a fund that has the lowest fee on the market. Okay, so they now, while they're, where's that, the flows? So, so you can see on the first column here, GBTC. So this is the Grayscale funds. I mean, their funds are pretty much, apart from a few exceptions, they've been red on the red all the time, and you can see that they've had 347,000 Bitcoin go out of their fund, and you can see that instead the BlackRock has accumulated 343,000. That's the big difference. So now BlackRock has taken the lead, Grayscale second place, and Fidelity is quickly catching up. But they now started this fund that, as you can see, this instead has got green inflows, because obviously there are people they are keen to go to where they pay the least amount of fees. And you can see now, apart from Grayscale, that there has been outflows from other funds, but all these outflows have been smaller than the inflows. So pretty much in the last 3, 4, 5, 6, 7, 8, 9, 10 days have been like a green wave, with money flowing back into the spot ETFs, and now we have reached a level of 17, almost like $18 billion. Okay, so for a long time we're around the 12, 13 billion mark. Now things have started growing again, and we're getting close to 18 and soon to 20 billion. Different thing for the Ethereum ETFs. Okay, Ethereum ETF again is got the similar thing. So the Grayscale one, because they had these Ethereum in for a long time, and the way that the Grayscale trust was built meant that he had a very high barrier to exit. Now that it is an ETF, it's very simple to sell these things. So many people are using it to cash in again. And again, so funds are coming out of Grayscale and they're flowing into all the other funds pretty much. Okay, but the total, so the difference is we haven't yet gone positive. So there have been days with positive inflows, as you can see, 1, 2, 3 since the launch, but the majority of the days have been negative. So the funds that are coming out from Grayscale outstrip all the other inflows, and the total so far has been negative. So about 139,000 Ethereum. So in dollars terms, is almost like $500 million. So it will take a while for the effect of these ETFs to be felt on Ethereum price as well. But again, this is what we're looking at now. So there's 2 billion of of funds coming out of Grayscale, and you can see now this now these funds are flowing into kind of BlackRock, Bitwise, Fidelity, and all the others, as well. But generally the the total outflows have been negative. So follow this as well, because if he has a similar way to this as it had in Bitcoin, can you see here what happened, to the price as well? When the ETFs were launched, we were here on the 11th of January, okay, about 46,000, and it went down all the way to 38 before it started climbing. So a similar thing now we can see for Ethereum. Okay, so the price is actually dropping. So it went, where was that? 1, 2, 3, 4, 5, 6, 7, 9, 10. I think it was up here. So it was about 3,005 when it, when it launched. It's already lost more than 10% since the launch of the ETFs. Okay, so obviously the long-term effect of this will be positive, will push the price up. It hasn't started yet. We just now, the last 3 days, we've had 2 days in the green and 1 day in the red. So we might starting to see the tide turning a little bit. And this is because you can see from Grayscale, 500 million, 300 million, 300 million, 300 million, 200, 120, 130. So and 78 is the last one. So the outflows are slowing down, and this is why you start seeing some green. So possibly in next week we should see more of a green wave appearing, and again the effect on pricing again turning to be from negative to positive. Okay, stop sharing. So we have time for a couple of quick questions, and then we'll call it a day for this week. Any questions? No, all clear. Obviously, I've been very clear today, because you have nothing to ask me. Okay, guys, if there are no questions, I will close the meet in 1 minute. Remember that now, from now on, the crypto hour last finishes at 8:45, and at 9 o'clock we start the AIW long-term wealth session. So I will soon, for all of you that are part of AIW, will soon see you on the other Zoom call. So hopefully you're gonna have your questions ready for that. Otherwise, it's gonna be a very short session. Okay. All right. So have a great weekend, everyone, and I will see you again next week.
Thank you very much, Luca.
Goodbye, everyone.
Bye.
Bye-bye.
Bye.